Welcome back to the Deep Dive. We're here to help you make sense of complex stuff, pulling out the key insights, the surprising bits.
Yeah, getting straight to the core.
And today we're tackling a really big one. We're diving deep into a comprehensive analysis document covering the economic survey for 2024-25.
A hefty document for sure.
Our mission, really, is to cut through all that complexity. We want to give you a clear picture of India's economy. You know, where things stand, what's driving it, maybe where it's headed, all based on this source material.
Think of it like an X-ray.
Hey.
A detailed snapshot.
Exactly. So let's unpack this.
Absolutely. It's packed with data, dense stuff. But, our job is to connect those dots for you, highlight the really crucial trends, the policies shaping things.
Okay, let's start right at the top then. The big macroeconomic picture. The analysis uses this phrase, I liked it, India's getting back into the fast lane.
Mm-hmm.
So what's the world looking like while India is trying to hit the accelerator? What's the global backdrop?
Well, globally, things are moderate. Growth was around 3.3% last year. Projections are pretty similar for 24 or 25. So not exactly booming.
Right. Steady, but not stellar.
And it's bumpy. You've still got supply chain issues popping up. Geopolitical tensions are definitely a factor. Trade feels, riskier.
Still feeling those effects.
Yeah, and a key challenge globally, even as overall inflation cools a bit, is that services inflation, the cost of services, it's staying stubbornly high in many places. Plus, you have things like, disruptions in the Red Sea, pushing up shipping costs.
Okay, so a tricky global scene. Moderate growth, lots of risks. Against that, India is accelerating. What's the headline GDP number for this financial year, FY25, from this analysis?
The analysis pegs India's GDP growth for FY25 at 6.4%.
6.4, that's quite robust compared to the global picture.
It is.
And which parts of the economy are really, putting the pedal to the metal to get us there?
The heavy lifting, according to the analysis, it's really coming from agriculture and services. Agriculture looks resilient. Estimated growth around 3.8%, helped by forecasts of a decent monsoon, good harvest expectations.
Okay. Agriculture holding strong.
And services, that continues to be a major engine, projected at 7.2% growth. Areas like finance, real estate, professional services, they're showing real strength.
Right. So those are the fast lanes. Where are the speed bumps for India's economy right now?
Manufacturing is facing some headwinds. The broader industrial sector is pegged at 6.2% growth, but manufacturing itself, it slowed down a bit mid-year, Q2 FY25.
Any idea why?
The analysis points to a few things. Weaker global demand hitting exports, some weather disruptions maybe, and even things like the timing of the festive season impacting demand temporarily.
Right.
But there are optimistic signs too. Business sentiment surveys like the PMI, they look pretty positive, suggesting things could pick up again.
Got it. Okay, let's talk about something that hits everyone's wallet. Prices. Inflation. What's the story there in the analysis?
So, the overall picture, headline inflation, it is moderating. It's projected to come down to 4.9% this year, from 5.4% last year.
That sounds positive.
Yeah, fuel prices have helped, they've eased, and importantly, core inflation, that's if you strip out the really volatile food and fuel prices, that's actually declined quite significantly.
Okay, core inflation down. But I have to say, I still feel the pinch at the grocery store. Especially, vegetables, dulls.
You're absolutely right to feel that, and the analysis highlights this clearly. That's the persistent challenge. Food inflation is still elevated, running at 8.4%.
Wow, 8.4.
Yeah, but it's not across the board for all food. It's very specific items, like you said, vegetables, pulses, often linked to unpredictable weather hitting supply.
So what's being done about those specific hotspots? Has the government stepped in?
Yes, the analysis details some very targeted measures. For onions, for example, they've been procuring more for buffer stocks. They put an export duty on them. Tomatoes, when prices shot up, there were subsidized sales. For pulses and wheat, they've put limits on how much traders can hold, allowed duty-free imports of key pulses like tur and urod. They also sell off surplus rice and wheat. From knowing which sectors are growing tells you where those jobs might be. Inflation, obviously, dictates how far your money stretches. Especially food inflation, that hits household budgets hard.
Yeah, definitely feel that.
And as we'll get into, decisions on things like interest rates affect your loans, your savings, all connected to your day-to-day reality.
That's a perfect segue. Let's talk about the financial side then. Monetary stability, India's external position. What's the central bank, the RBI, been focusing on?
Right, so the RBI is always doing this balancing act, isn't it? Trying to keep inflation and check price stability, but also supporting economic growth.
The dual mandate.
Exactly. The analysis points out their main actions recently. They've kept the key interest rate, the repo rate, steady at 6.5%. But they did shift their official stance, moving away from just focusing on withdrawing stimulus to what they call a neutral position.
What does neutral really mean in practice?
Think of it as signaling maybe less immediate worry about inflation running away and perhaps more readiness to consider growth needs down the line, though importantly, they haven't actually cut rates yet.
Okay, stance changed, rate hasn't. And what about managing the money supply, liquidity?
Yeah, they've been active there. For instance, they cut the cash reserve ratio, the CRR. That's the slice of deposits banks have to park with the RBI. Cutting it injected quite a bit of liquidity back into the banking system, making sure banks have funds to lend out.
And how are the banks themselves doing? Are they healthy enough to lend?
This is a big positive story in the analysis. Banks are in much, much better shape, dramatically better than a decade ago. Bad loans, NPAs, they're at a 12-year low.
12 years. Wow.
Both gross NPAs and net NPAs are way down. Banks have cleaned up their books, they're better provisioned against potential losses, much more capable of lending now. There's also been work consolidating and strengthening the smaller regional rural banks.
So with healthier banks, are people and businesses actually borrowing more?
Overall, bank lending growth has sort of stabilized. But what's really interesting, and the analysis highlights this, is the surge in credit going to the smaller businesses, the MSMEs.
Ah, okay.
Their borrowing is going faster than lending to large companies. That suggests there's dynamism, maybe investment happening at that smaller scale. Lending to industry overall is picking up too. Personal loans and services lending have slowed a bit, partly because the RBI tweaked some rules to make that lending a bit more cautious.
Got it. And the stock market feels like it's constantly in the headlines.
It's shown remarkable resilience, hasn't it? Despite global ups and downs, the total market value of Indian companies crossed $5 trillion. That's a big milestone.
Huge number.
But maybe the bigger story the analysis captures is the explosion in retail investor participation, just regular folks investing. The number of individual investors, demat accounts, has more than doubled in just 7 years.
Doubled. Wow. What do you think is behind that?
Probably a mix of things. More financial literacy, maybe. It's certainly easier to open accounts online now. The positive market performance itself attracts people. Maybe younger people are saving and investing differently. It's definitely a major shift.
Are companies taking advantage of this? More IPOs?
Yeah, India's had a pretty significant share of global IPO activity. Companies are raising funds. One area the analysis does note is still a bit underdeveloped compared to other big economies is our corporate bond market. Still room to grow there.
The analysis also flagged how AI is starting to change finance.
Oh, definitely. AI is already being used quite a bit for credit scoring, deciding who gets a loan, for fraud detection, risk management, even customer service chatbots, right?
Yeah, you see those everywhere.
But the analysis also raises the caution flags, ensuring AI decisions are fair and transparent, cyber risks, data privacy. The RBI is watching this closely and has proposed this framework for responsible and ethical AI. They call it free EAI.
Free AI.
Okay.
Another big reform we heard a lot about was the Insolvency and Bankruptcy Code, the IBC. How's that working out?
It seems to be making a difference in resolving failed companies and getting money back. What's interesting is that a huge number of cases are actually getting settled before they even formally go into the whole IBC court process.
So it's changing behavior upstream?
Seems like it. Encouraging companies to sort things out earlier. The main challenge, the analysis notes, is still the time it takes once a case does go to the courts, often longer than the target timelines. They suggest maybe AI could even help speed up case management there.
Interesting. Okay, let's shift focus outwards now. How's India's trade doing, given all the global headwinds we talked about?
Pretty resilient, actually. Our total exports, that's goods and services combined, they grew by 6% in the first 9 months of this financial year.
And services are a big part of that story,
A
right?
huge part. Services exports are a real powerhouse. India is the 7th largest services exporter globally. And get this, we're the 2nd largest exporter in the world for IT and business services.
Second largest. That's incredible.
It really is. Shows our strength there.
What about the other side of the coin, imports?
Imports also grew actually slightly faster than exports during that period. We still import more physical goods than we export, so there's a merchandise trade deficit.
Right.
But those strong services exports plus record high remittances coming in from Indians working abroad, they really help balance the books. They keep the overall current account deficit, the CAD, quite manageable. It was around 1.2% of GDP mid-year.
And our foreign exchange reserves, our sort of rainy day fund, how are we looking there?
Very strong. Over $640 billion. That puts India among the top 4 countries globally in terms of reserves. It's a substantial buffer. It covers about 90% of our external debt, which itself has remained stable. So a comfortable position.
What about the rupee's value? How's it holding up?
It has weakened a bit against the US dollar, but that's largely driven by global factors, like the dollar strengthening overall. The analysis looks at broader measures, though, against a basket of currencies. The near nominal effective exchange rate has been quite stable.
Meaning against the average.
Yeah, against the overall basket, not much change. And the real effective exchange rate, which adjusts for inflation differences, that's actually appreciated slightly. So, relatively speaking, the currency has been quite stable overall.
The analysis mentioned trade diversification. What does that mean in practice?
It's basically about being smart, not putting all our eggs in one basket, market-wise or product-wise, finding new markets for our existing goods, and also developing new export strengths. The analysis highlights success in pushing into new countries for certain products and seeing growth in maybe unexpected areas, like exporting shipping vessels or specific types of iron and steel alloys.
Diversifying what we sell and where we sell it.
Exactly.
Now, speaking of markets, particularly Europe, there are these new environmental regulations coming from the EU, CBAM and EUDR.
Yes, those are significant. CBAM, the Carbon Border Adjustment Mechanism, is basically a carbon tariff. Importers in the EU will have to pay a carbon price for goods like steel, aluminium, cement, fertilizers, if they come from places with less strict climate rules.
So it affects some key Indian exports.
Absolutely. Iron and steel, aluminium, cement, fertilizers are the main ones initially. Then there's EUDR, the deforestation regulation. That requires proof that products like coffee, leather, wood furniture, cocoa weren't sourced from deforested land.
What's the potential hit to our exports to the EU from these?
Well, a study cited in the analysis estimates the combined impact could affect nearly $10 billion worth of India's exports to the EU. That's about 9% of our total exports to them. So it's substantial. Indian industries will definitely need to adapt.
Right, that's a challenge to watch. Okay, we've covered the big picture, the financial side. Now let's really dig into the engines driving the economy. Investment, infrastructure, industry, services.
Infrastructure is absolutely key. The analysis really emphasizes this, especially for that long-term goal, Viksit Bharat at 2047 and becoming a developed nation. Government spending has really ramped up, plus reforms to get more private money involved.
What are the flagship programs here?
You've got the National Infrastructure Pipeline, the NIP. That's a massive plan, targeting over 100 lakh crore in investment across sectors.
Huge number.
And then the National Monetization Pipeline, NMP. This is quite a clever approach, actually. It involves leasing out existing government-owned assets, roads, power lines, ports to private companies for a set period, generating revenue up front. The analysis shows they're making good progress hitting the NMP targets. And PM Gati Shakti is aimed at coordinating all this better.
Let's zoom in on a few key infra areas. Railways.
Big focus on modernizing the network, expanding it, faster trains like Vande Bharat, which we're seeing more of, and building dedicated cargo terminals to improve freight movement.
Roads have seen just incredible expansion, haven't they?
Absolutely massive growth. And a strategic shift now towards building dedicated high-speed corridors. And here's a concrete impact example from the analysis. FASTag, the electronic toll system. It's cut average waiting times at toll plazas from over 12 minutes down to under 50 seconds.
Wow, that's a noticeable difference.
Huge difference. And the aim is to move towards totally barrier-free tolling eventually.
Aviation's another sector that seems to be booming.
Fastest growing aviation market in the world, according to the analysis. Huge investment going into airports, expanding capacity. And the UDAN scheme is still working on connecting smaller towns and cities by air.
And ports, shipping. Crucial for trade.
The Sagarmala program is the big push there, developing coastal regions and boosting port capacity. They're planning new mega ports like Vathavan, and India is also developing international links through ports like Chabahar in Iran and Sitwe in Myanmar, opening up alternative trade routes.
What about power? Energy is fundamental.
Installed capacity is growing. And encouragingly, the share from non-fossil fuels renewables, nuclear, it's now close to 47%, nearing that 50% target for 2030.
That's good progress.
Yeah, schemes like PM Surya Ghar for rooftop solar on homes, the Green Energy Corridor to transmit renewable power, missions for bioenergy and green hydrogen, these are all pushing that transition. The big challenge flag, though, is our dependence on imports, especially from China, for things like solar panels and batteries, critical minerals,
Right.
the supply chain vulnerability. What about digital infrastructure? The 5G rollout has been really rapid across the country. Work's ongoing to get broadband into more rural areas. Data centers are a big growth area, too, with government support.
And zooming back out from the big national projects, what about basic infra in towns and villages? Water, sanitation, housing.
Huge focus there as well. Jal Jeevan Mission is making massive strides connecting rural homes with piped drinking water. Swachh Bharat is continuing the work on sanitation. In cities, you see Metrorail expanding. India now has the world's third largest metro network, plus affordable housing schemes, the Smart Cities mission. And the analysis gives a powerful stat on rural housing. PMAG has completed over 2.6 crore houses since 2016. Evaluations show it significantly improves ease of living, partly because having a proper house makes it easier to get toilet and water connections too.
That makes sense. They link together. Okay, let's look at industry now. How's that sector performing?
Industry contributes about 30% to the economy. As we mentioned, overall growth was 6.2% in FY25, but manufacturing had that temporary dip. A key theme the analysis pushes here is deregulation drives growth.
Meaning less red tape.
Essentially, yeah. Making it easier to do business. Simplifying standards, giving businesses more legal certainty, reducing tariffs where possible, moving towards risk-based checks instead of one-size-fits-all rules.
Any specific industries highlighted?
Well, India is the world's second biggest cement producer. Steel production's growing. Chemicals are important. There's a definite policy push to boost domestic manufacturing where we rely heavily on imports, like capital goods machinery. Electronics manufacturing is a big success story. We now make almost all our smartphones domestically, partly thanks to those PLI schemes, the incentives.
Right.
Textiles were a major global exporter, but the analysis suggests a need to shift more towards man-made fibers. Pharma is strong, but still faces challenges with importing key raw materials, APIs.
And MSMEs, small and medium businesses, they employ so many people.
Crucial. Employing over 23 crore people, it's staggering. There are various initiatives simplifying registration with the Udyam portal, expanding credit guarantee schemes so they can get loans, platforms like Trees Yes to help them get paid on time. But challenges remain. Access to finance is still tough for many. Finding skilled workers, linking up with bigger markets.
The analysis had some specific examples of success, didn't it? Like Tamil Nadu.
Yes, the Tamil Nadu footwear manufacturing case study is really interesting. It shows it wasn't just luck. They deliberately developed industrial parks in rural areas to tap into the available workforce, especially women. They ensured land was available, actively courted global investment, offered customized incentives. It's a great model of targeted support.
Right, leveraging local strengths strategically. Okay, we touched on services earlier as a growth engine, but let's focus specifically on that sector now.
It's the biggest chunk of the economy, right? Over half the GVA, major employer. And it's been the most consistent growth driver, often picking up the slack when other sectors slow down. Finance, real estate, professional services have been particularly strong lately.
And how is technology, particularly AI, changing things here?
Profoundly. We mentioned finance, but think about logistics using AI to plan the best delivery routes. Retail using AI for customer insights. Telecom using it for network management. It's becoming embedded.
What about ONDC, the Open Network for Digital Commerce? That's supposed to help small players compete online.
Yeah, ONDC is a really interesting experiment. The idea is to break the dominance of the big e-commerce platforms, create an open network where any small retailer or business can plug in and sell online on more equal terms. The analysis shows it is gaining traction. Transactions are up, more sellers are joining, including self-help groups and MSMEs. It's expanding beyond retail now, too, into areas like financial services.
Is services growth evenly spread across the country?
Not really, no. There's quite a concentration. A handful of states, Karnataka, Maharashtra, Tamil Nadu, UP, Gujarat, they account for more than half of India's total services output. Maharashtra leads in finance, Karnataka dominates IT, Kerala is strong in trade and real estate. Some states, especially in the Northeast, are still more reliant on public administration services.
Okay, clear regional differences there. Right, let's shift from the engines of growth to the foundation, the people, agriculture, social empowerment, health, education.
Agriculture is still absolutely fundamental, supports almost half the population directly or indirectly, ensures our food security, contributes about 16% to GDP, growth has been decent, and harvests look promising.
What are the key trends within agriculture?
Diversification is a big one, moving towards higher value things. Horticulture, fruits and vegetables, livestock, fisheries, they're all growing faster than traditional food greens. Fisheries growth has been particularly strong. The analysis even calls floriculture, growing flowers, a sunrise industry. It's export-oriented, gives better returns, and even small farmers can get into it. Grape exports are another highlighted success. The big remaining challenge is our heavy reliance on importing edible oils.
And the main risks for farmers. Still climate.
Climate vulnerability is definitely the big one. Less than 60% of our farmland is irrigated. That leaves a lot of farmers, especially smallholders, really exposed to droughts, erratic rains.
What kind of support is available?
There's quite a bit. Access to credit through Keysan credit cards has expanded massively. Crop insurance under PMFBY covers millions, and they're using tech like drones for faster assessments now. Support for buying farm machinery, even promoting drones operated by women's self-help groups as a rental service for other farmers. Plus, digital platforms like eNAM trying to connect farmers to markets better.
Okay, now let's talk about investing in people directly. Health and education.
The analysis shows government spending on social sectors, including health and education, has been clearly rising over the last few years. There's also interesting data suggesting the spending gap between urban and rural households might be narrowing, which points towards sustained rural consumption growth. And government policies, like providing subsidized food grains through PDS and PMGK-High, play a huge role in cushioning the poor against price shocks.
Education is called a foundational pillar. What's the focus there?
Building that human capital. The goal is universal school enrollment, 100% GER, though the analysis shows we're not quite there yet, especially at secondary levels. Dropout rates are declining, though, which is good news. There's a big push on early childhood care and education, ECCE, new initiatives focused on play-based learning for 3-6-year-olds, and holistic development right from birth, including support for differently abled kids and maternal health.
And foundational skills, reading, writing, basic math.
That's a major focus under the National Education Policy. The NIPU Bharat mission has a clear target: ensure all kids have foundational literacy and numeracy by the end of grade 3. The analysis also stresses the importance of soft skills, social and emotional learning for teenagers, with specific programs mentioned.
Skills for the future economy, too.
Absolutely critical. Preparing kids for Industry 4.0, automation, AI, IoT. In higher education, the push is to boost enrollment significantly and make universities more multidisciplinary, breaking down rigid subject silos.
And health, equally vital.
Total spending on health as a share of GDP is rising. The Ayushman Bharat PMJAY insurance scheme is highlighted as being really key in reducing how much people have to pay out of pocket for healthcare. It covers the bottom 40% of the population. It's the world's largest health assurance scheme, and it's recently been expanded to cover senior citizens aged 70 plus.
Any cool tech examples in health?
Yeah, the analysis mentions pilot projects using drones, medicines from the sky to deliver medical supplies to remote areas in Telangana in the northeast. Also using AI, like in Rajasthan, to help diagnose silicosis, a lung disease, from digital x-rays, shows how tech can improve reach.
The analysis even touches on lifestyle and well-being, connecting it to work.
It does. Some fascinating points there. It mentions studies suggesting that, believe it or not, poor relationships with managers or lack of purpose at work can lead to more lost workdays than even some physical health problems. There's also focus on screening for non-communicable diseases, lifestyle diseases for people over 30, and significantly, it flags research on the negative health impacts of ultra-processed foods, linking them to everything from weight gain and anxiety to serious conditions like heart disease, diabetes, even higher mortality risk. A real flag about dietary choices.
Improving rural life quality seems like a cross-cutting theme.
Yes, framed as essential for inclusive development. We talked about housing, but also programs like Dayway NRLM, empowering women's SHGs, boosting their incomes. And MGNRGS, the Employment Guarantee Scheme, is apparently evolving, focusing more now on creating assets on individual land, like wells or ponds, directly benefiting poor families, rather than just community projects.
Any innovative local examples here?
The analysis mentions the Haritha Karmasena in Kerala women's groups managing waste collection and generating revenue from it. Another Kerala example is an innovative policy allowing landless women's SHGs to lease government land for horticulture, giving them access to land and income supported by the local panchayat. Creative ways to tackle landlessness.
Right. This focus on human capital, agriculture, rural development, it leads right into the future work, doesn't it? Employment, skills, AI.
Absolutely. This is presented as a really critical juncture for India. The positive news first. The overall employment situation has improved. The unemployment rate has fallen steadily, from 6% down to 3.2% over the last few years.
That's a significant drop.
It is, and importantly, both the labor force participation rate, more people looking for work, and the worker population ratio, more people actually working, have also increased. So more people are engaged in the economy.
Has the kind of work people are doing changed?
Yes, quite dramatically, according to the analysis. There's been a big rise in self-employment. It now accounts for nearly 60% of the workforce.
60%. Wow.
Yeah. Regular salary jobs have kind of held steady as a proportion, while casual labor has declined. It suggests maybe more people are starting their own ventures or perhaps prefer the flexibility that comes with self-employment.
And the story about women joining the workforce.
This is probably one of the most striking positive trends in the analysis. Female labor force participation rate, the FLFPR, has jumped remarkably from around 23% up to nearly 42% in just 7 years, mostly driven by rural women.
What's driving that huge increase?
The analysis suggests several factors. Better measurement in surveys, capturing unpaid work perhaps, targeted skilling programs for women, better access to credit for women's SHGs through programs like DAY and RLM, and a conscious government push to support women entrepreneurs, things like subsidies for quality certifications for women-led MSMEs. They mention examples like a women-focused incubator in Telangana and women getting jobs in solo projects in Rajasthan.
Okay, so more people working, especially women, shift towards self-employment. The analysis also mentions formalization using things like EPFO data.
Yes, using Provident Fund registrations as a proxy, it suggests growth in formal sector employment as well. But despite these positive trends, there's a huge underlying challenge, right? Job creation.
The sheer number needed.
Exactly. Given India's demographics, that demographic dividend we talk about, the analysis estimates India needs to create something like 78.5 lakh, that's 7.85 million new non-farm jobs every single year until 2030, just to absorb the young people entering the workforce productively. It's a massive number.
And finding the right balance in labor laws. Security versus flexibility.
That's discussed too. The new labor codes are presented as trying to simplify things, but also strengthen protections, especially for informal workers, things like minimum wages, safety standards, though some sectors like construction still have high accident rates. At the same time, there's a move towards allowing more flexibility, like some states increasing the limits on overtime hours. It's a constant balancing act.
With that job creation need and the changing economy, skills must be paramount.
Absolutely critical. The analysis points to a big skills mismatch. A large chunk of the workforce still has low levels of formal education. But even among graduates and postgraduates, there's significant underemployment. Suggests the skills they have aren't always what the market needs right now. Upskilling, reskilling is vital.
What kind of skilling initiatives are highlighted?
Well, besides the established ones like PMKVY, the analysis focuses a bit on the new PM internship scheme, PMIS. It sounds quite interesting. The goal is to give young people, especially from smaller towns, practical, hands-on experience. Paid internships for up to a year.
Who's eligible?
It's aimed at young people, 21, 24, who aren't in elite institutions like IITs or CAs and aren't already full-time students or employed. Covers people from matriculation up to graduates. The idea is it acts as a door opener, giving them that first break, that real-world experience. Stipend mentioned is around $5,000 a month.
Okay, interesting approach. Now, the elephant in the room, AI, artificial intelligence. The analysis tackles this head on, right? Crisis or catalyst?
It really dives into that duality. There are absolutely valid concerns. Automation replacing jobs, particularly repetitive tasks. The potential for widening inequality if AI benefits only a few. Global studies suggest millions of jobs worldwide are exposed to automation. India's large service sector, things like BPOs, low-end IT tasks, could be vulnerable. And the tech is moving so fast, regulations are struggling to keep up, raising issues of privacy, bias, and algorithms accountability.
Those are serious risks. What about the catalyst side, the potential upside?
The analysis strongly leans towards AI's potential to augment human capabilities, not just replace us, to boost productivity. Think AI assisting doctors with diagnoses, helping teachers personalize lessons for students, improving quality control in factories. Human-AI collaboration could actually lead to new kinds of jobs, potentially increasing overall employment.
So working with AI, not against it.
That's the emphasis. Generative AI alone is predicted to add trillions to global GDP. India's own AI market is forecast to grow very rapidly, 25-35% annually. That should drive demand for high-skilled jobs.
How do we manage this massive shift then?
The analysis suggests we need three key types of institutions. First, enabling institutions, basically, training people with the right skills, AI skills, coding, data science, but also higher cognitive skills like critical thinking, creativity. Second, ensuring institutions' social safety nets, unemployment support, robust retraining programs for those whose jobs are displaced. And third, stewarding institutions developing ethical guidelines, regulations, oversight bodies to ensure AI is used responsibly and benefits society broadly.
That requires big changes in education and training.
Huge changes. Integrating AI training much earlier, expanding upskilling programs massively. The analysis also notes, maybe slightly reassuringly, that the sheer cost of developing and deploying the most advanced AI is very high. Think GPT-4 or Gemini training costs. This might mean adoption is more gradual, giving policymakers some breathing room to adapt.
So the strategy shouldn't be to resist AI, but to shape its use. Focus on augmentation.
Precisely. Use AI to make people better at their jobs. The analysis gives examples. AI helping customer service agents boosted productivity significantly, especially for lower-skilled workers. AI can also democratize expertise. Think AI tutors, diagnostic tools, financial advice becoming accessible to many more people.
Will AI impact all sectors equally?
Likely not. The analysis suggests sectors where demand is elastic, meaning it grows a lot if prices fall or quality improves, like financial services, retail, healthcare. Those sectors are more likely to see AI create new jobs or augment existing ones. Sectors with low elasticity might face higher risks of job displacement.
The analysis brings in a really interesting comparison here, looking back at post-war Japan.
Yeah, that's a fascinating case study about sharing the gains of growth. The argument is that Japan's long boom was partly built on a social contract where workers and consumers accepted a smaller slice of the pie initially. In return, companies reinvested heavily in technology, shared productivity gains over time, kept executive pay in check, and the government invested in public goods.
And the contrast with India today.
The analysis points out that recently in India, corporate profitability has soared, but wage growth has arguably lagged. The lesson, especially with AI potentially concentrating wealth further, is the importance of finding ways to ensure a fair distribution of income between capital and labor for long-term social and economic stability. It's about sharing the prosperity.
Very thought-provoking. Okay, finally, let's take the long view. Sustainability, climate change, and that road to Viksit Bharat at 2047.
India's ambition is clear. Become a developed nation by 2047, but do it with low-carbon growth. The challenges are immense, deploying renewables at the scale needed, cracking energy storage technologies, securing supply chains for critical minerals like lithium, cobalt, and India is very vulnerable to climate impacts already. The analysis shows spending on climate adaptation is rising significantly as a share of GDP, which is necessary.
What are the key areas for adaptation?
Things like developing climate-resilient crops and better water conservation in agriculture, making cities low-carbon, water secure, flood resilient, protecting coastal areas like restoring mangrove forests through the MIL-AHTI program, and better water resource management nationwide, using tech to monitor groundwater and predict floods.
What about the energy transition itself, moving away from fossil fuels?
It's happening, but the analysis acknowledges coal will remain important for India's energy security in the medium term, so efforts are also on making coal use more efficient. But renewable energy capacity, as we said, is growing fast, almost half our installed capacity now, driven by schemes for rooftop solar, green hydrogen, building transmission lines for renewables, solar pumps for farmers. The dependency on imported components, especially from China, remains the key vulnerability here.
Is money flowing towards green projects, green finance?
Yes, there's a push. Mandatory ESG reporting for larger companies is coming in. The government has issued sovereign green bonds specifically to fund green infrastructure.
And what about individual actions, sustainable lifestyles?
That's the idea behind the Life Initiative Lifestyle for Environment, promoting sustainable habits globally. There's also the Green Credit Program, which sounds interesting. It incentivizes environmentally positive actions by individuals or communities, like tree planting or waste segregation, potentially creating a market for these green credits. The concept of a circular economy minimizing waste, maximizing reuse, is also gaining ground. Policies like extended producer responsibility for plastic and e-waste are part of that.
Air pollution is still a huge challenge in many cities.
It is. The National Clean Air Program is working with over 130 cities on action plans. Tackling agricultural stubble burning, a major source of pollution seasonally, is also a focus, with financial assistance for better management practices.
So pulling everything together, for India to achieve that Viksit Bharat at 2047 vision, what does the analysis say are the absolute must-haves, the essentials?
It lays out several key ingredients: sustained high growth, close to 8% a year for over a decade, a big jump in the investment rate, maybe to around 35% of GDP. Developing strengths in advanced manufacturing and emerging tech, like AI, robotics, biotech, creating those 7.85 million non-farm jobs every year, achieving universal literacy and high-quality education, and building top-notch, future-ready infrastructure quickly and at scale.
And underpinning all of that, the analysis really hammers home the importance of robust institutions.
Yeah, drawing on economic thinking like why nations fail. The idea is that strong, inclusive institutions, fair laws, effective courts, predictable policies, low corruption are the bedrock. They ensure growth benefits are broadly shared. The analysis calls them the hands that shape a country's economic destiny. It stresses needing regulation that's based on trust and transparency, and even suggests regulators should publicly report on their own effectiveness.
So the overall policy direction coming out of this analysis seems pretty consistent.
It reinforces many ongoing themes. Keep deregulating where sensible, boost investment, promote domestic manufacturing, make in India, enhance economic freedom, support MSMEs, secure domestic supply chains for energy and critical minerals, foster innovation, diversify trade, attract quality FDI, and crucially, push for reforms not just centrally, but get states actively involved too.
Wow, okay. That was a really thorough look under the hood of India's economy, drawing from this comprehensive economic survey analysis. We see the resilience, the growth momentum despite global challenges, driven by that huge infrastructure push, policy reforms, the continued strength in services and agriculture.
Mm-hmm.
We also covered the vital progress, but also the ongoing challenges in building human capital health, education, skills, the shifting sands of the job market, the massive potential and disruption from AI, and that essential focus on sustainability and building strong institutions for the long haul.
Hopefully this deep dive has armed you, the listener, with some key data points, a sense of the major initiatives underway and how all these complex economic forces kind of fit together, how they interact.
Absolutely. And maybe here's a final thought to leave you with, building on what we discussed. We talked about formalizing the economy, AI augmenting work, and that really interesting historical parallel with Japan about sharing the gains. We know India needs millions of jobs and needs to adapt to tech, but thinking about that lesson from Japan, what does a truly successful, truly formalized and AI-augmented workforce actually look like for the average Indian worker on the ground? And crucially, how do we make sure the benefits, the prosperity generated by this massive transformation, are shared equitably? Not just concentrated at the very top, but felt across the whole population. Something to definitely keep thinking about as India journeys towards that 2047 goal.